I'm about to show you the how to boost your credit score by 40, 60 points in the next 30 days using tactics that most people, including loan officers, don't know exist. This isn't about paying off debt or waiting months for results. This is about gaming the system legally. Here's what this means for your mortgage. Every 20-point credit score increase can lower your interest rate by 0.25%. What this means is on a $400,000 loan, that's a $60 less per month. That's $21,600 savings over the life of the loan. Plus, you might qualify for programs you didn't know existed. I've seen people go from loan denial to approval in 30 days using exactly what I'm about to show you. Most people think credit repair takes 6 to 12 months. They pay companies hundreds of dollars to fix their credit, or they just accept whatever score they have. Meanwhile, they're getting quoted higher rates or denied entirely for loans they should qualify for. Here's the problem. Credit scoring isn't just about paying your bills on time. It's a mathematical formula, and once you understand the formula, you can optimize it quickly. The three biggest mistakes I see: people focus on paying off debt instead of optimizing utilization ratios. They close old credit cards thinking it helps their score. They don't understand the timing of when changes hit their credit report. Result, they leave 40 to 80 points on the table and pay thousands more in interest. The solution is called credit score optimization, and it's based on understanding exactly how FICO calculates your score. Your FICO score breaks down like this. 35% is payment history. We can't change this quickly. 30% is credit utilization. This is where we make the magic happen. 15% is length of credit history. Don't touch this. 10% is a credit mix. Easy, quick wins here. 10% new credit. We use this strategically. We're going to focus on the 30% plus 10% plus 10%, which equals 50% of your score that we can impact within 30 days. That's where your 40 to 60 point boost comes in from. Here's your exact 30-day action plan. Week 1, the utilization hack. Step 1, get your real numbers, pull your credit report. You can do that from annualcreditreport.com, which is the only true free report that you can get. Write down every credit card, the balance and the limit. Step 2, calculate your utilization ratios. You have two ratios that actually matter. We would call the overall utilization, which is total balances divided by total limits. Then you have the per card utilization, each card's balance divided by that card's limit. Here are the magic numbers. Keep overall utilization under 10%, not 30% like everyone says. Keep individual cards under 10%. Have one card report a small balance, 1 to 3% of the limit. Have all other cards report 0 balance. Step 3, the payment timing strategy. This is crucial. Pay your cards before the statement closes, not after. Most cards report your statement balance to credit bureaus, not your current balance. Find your statement close dates. Call the card companies and pay balances down to your target amounts 3 days before each statement closes. Step 4, the balance redistribution. If you can't pay everything down, redistribute the balances. Move balances from one card with lower limits to cards with higher limits. This improves your per card ratios. Now here we go, week 2. We call this the credit limit expansion. Step 5, request credit limit increase. Call every card company and request limit increases. Don't apply online. Call and speak to a human. Use this script. Hi, I've been a good customer. I've been paying for about 3 years. I always pay on time, and I'd like to request a credit limit increase to improve my credit utilization ratio for a mortgage application. Here's a pro tip. Ask for 2 to 3 times your current limit. If they say no, ask what you need to do to qualify. Some companies do what they call soft pulls for increases. It won't hurt your score. Call back in a few days if denied. Different reps, different answers. Step 6, the authorized user strategy. Get added as an authorized user on someone else's old high limit, low balance credit card. Their good payment history and low utilization helps you score immediately. Requirements for the primary card holder: card must be at least 2 years old, perfect payment history, low utilization of that card under 10%, high credit limit. Week 3, the credit mix optimization, which is step 7, add installment credit if needed. If you only have credit cards, your credit mix is incomplete. FICO likes to see that you can handle different types of cards or credits. Excuse me, not cards, credit. Quick options here: credit builder loan from your bank or credit union, self.com, credit account, small personal loan that you immediately pay off. Step 8, the store card strategy. If you need another account, get a store card from a place you shop regularly. These are easier to qualify for and count toward your credit mix. Use it once, pay it off, then sock drawer that card. Week 4, the monitoring and fine tuning, which is going to be step 9. Monitor your progress using a free app called Credit Karma, or similar to watch changes. These update weekly. Your FICO scores will update monthly, but you can see utilization changes faster on these platforms. Step 10, the final optimization. Once you see your utilization ratios improving, fine tune. Make sure only one card shows a small balance. All others should have 0. Overall utilization should be 5 to 10%. Step 10, dispute any errors while waiting for your optimization to hit. Dispute any errors you found on your reports. Even small errors can cost you points. The advanced moves here. The double payment strategy. Make 2 payments per month on your highest balance card. This keeps your average daily balance low, even if your statement balance is higher. The 0% transfer play. If you have high utilization, transfer balances to a new 0% APR card. This can improve utilization ratios while saving interest. The business card separation. Business credit cards often don't report to your personal credit unless you default. Use business cards for expenses to keep personal utilization low. Look, this strategy works. I've seen clients go from 650 to 710 in 30 days using exactly these steps. But here's the key. You have to execute it perfectly and understand the timing. If you're buying a home in the next 90 days, these 40 to 60 points could save you tens of thousands of dollars. But if you mess up the timing or miss a step, you could actually hurt your score temporarily. I've created a free credit optimization checklist that walks you through each step with exact timing and phone scripts. It also includes a calculator to show you exactly how much money each point increase will save you on your mortgage. To get the free checklist, click the link in the description or text credit 559-554-6053. And if this video helped you, smash that like button and share it with anyone who's trying to buy a home right now. Most people don't know these strategies exist. Drop a comment and let me know what's your current credit score and what's your target. And personally, respond myself with specific tips for your situation. Remember, your credit score isn't permanent. It's a number you can optimize. Use these strategies and watch your score and your mortgage options improve dramatically. I'll see you in the next video.